joining us. My name is Damian Gallagher, and I'm here with Joe Garner from Emerald Advisors. And Joe is our Director of Research and also Portfolio Manager on our small cap growth strategy. And today we're going to be diving into earnings through the first quarter of 2024 and kind of doing an unpacking of what we saw. So if we could start, Joe, just kind of give us the overview of earnings season and what the general tone has been.
Yeah, from a high level, earnings were relatively flat in the first quarter. Maybe down 1% according to Fury Research, with sales up about 3%. Relatively flat, but it's really when you get under the surface and you see some of the dynamics that were going on. So one of the things that was interesting, while on the surface it looked flat, about 60% of companies actually reported better than expected earnings. And then if you look at where that was coming from, we saw some of the best earnings growth in areas like healthcare and financials, but the best earnings beats were coming from areas like financials, technology, and staples. And typically where you see the best outperformance on earnings is oftentimes where you're going to see the best outperformance in terms of share prices. And then on the flip side, where we saw some of the most challenges during this first quarter were areas like energy and materials, some of the maybe more commodity-like spaces, as we've seen us move from a high inflation environment to one that's certainly a much lower inflation environment, taking away some of that tailwind.
Okay, so I think you kind of alluded to it a little. Seems like there might have been some themes that drove earnings through the first quarter. Could you dig into that a little deeper and tell us what you saw?
Yes, some of the things that we certainly saw. Number one, the AI infrastructure build is happening. There have been estimates out there that we may need to spend up to $1 trillion, possibly more, to upgrade our computing infrastructure to handle the AI applications that are coming onto the marketplace. That's requiring a lot of data center investment, a lot of investment in high-end servers, and a lot of the componentry that goes along with that. That is certainly happening and beginning to take off at a fairly rapid pace. We continue to see a lot of innovation in the healthcare space, both in terms of new drugs coming into the marketplace and new devices, and certainly in a market where we no longer have the headwinds that we experienced during the pandemic of people being more reluctant to go into their doctors. We're seeing people, the utilization of the healthcare industry is rising, leading to more new diagnoses, more procedure volumes. That's certainly been helping that space as well. Aerospace and defense has been an area where we've seen a lot of interesting growth on the earnings side. On the defense side, we're seeing a lot of investment in areas like unmanned aerial vehicles or drone technology. We certainly see a lot of that going on around the world in areas of unrest. And then on the aerospace side, we've seen air travel volumes continuing to increase. And also the well-documented issues that Boeing and Airbus have had in bringing new aircraft into the marketplace. We've had to run a lot of the old aircraft longer and harder, which requires more demand for maintenance, air overhaul services, and the components that go along with that. It's been a great area of earnings growth. And then one that we often talk about that people don't necessarily think about in terms of a hotbed of innovation, that consumer staples outperformance has been driven by a relatively short list of category disruptors that are going out there and taking meaningful market share in some very large markets. We see a lot going on in the pet food space, a lot going on in the beverage space, or they're developing new markets, many times appealing to that new, younger generation of consumers. So maybe the biggest takeaway out of earnings is that it wasn't a narrow market and a narrow economic environment where we were just seeing one or two areas and you had to be in those spaces. We actually saw innovation throughout. Hopefully that was the message that came through from Groundhog Day earlier this year. And that certainly played out in first quarter earnings and opening up a wealth of opportunities, particularly among the small cap end of the marketplace.
All right, well, thanks. So I think just one more quick question, if we could
Sure.
kind of do a little bit of forward looking here. Could you share a little bit just on what your expectations are for earnings as we head into the end of this year and even beyond?
Yeah, I think it's reasonable to expect that we're going to see a little momentum pick up on the earnings side, and I think part of it is going to be resolving some of the macro uncertainty that's out there. What direction are interest rates going to go, and when? When do we see the Fed start to ease? There certainly has been the talk of that happening. Inflation has stayed stubbornly high. I think it's reasonable to expect that either late this year or early part of next year, we're going to see some easing in the interest rate environment. And I think that's going to serve as a growth catalyst for the overall economy. Small caps certainly should be a beneficiary of that. And I also think when we get past some of the uncertainty regarding the election, which is going to become the forefront for the market and for a lot of investors as we get into the fall of this year, I think once we move past that and have a better idea where we may be going in terms of fiscal policy, I think that could also provide some stability, perhaps another catalyst for the market.
All right, so a lot hinges on the Fed. I guess we'll see what happens, but thanks for your time, Joe.